Assalamualaikum students. Okay, so for today, we'll continue with the content in our chapter 4 because as I mentioned before this, the content here in the chapter 4 is quite longer rather than the other chapters. Okay, so for today, we will continue with the other part, okay, in our chapter 4, which is we will continue with the risk measurement, okay. And then for the limiting risks, okay, risk measurement, limiting risks, okay, and then we will go through in terms of the reporting of the credit management, okay, and then how we will manage a problem credit, okay, faced by the banking institution, okay. So these are the learning objective, our learning objective for our today's session. Okay, we will go through for all this content, okay, for our chapter 4, right? So we continue with our slide, okay. So for the risk of measurement, before we go through for the risk of measurement, so we will recap a certain content in the previous class, which is we also already discussed in terms of the credit appraisal requirement, which are the factors that the banking institution will consider before they approve a loan to their customers. Okay, so these are the example here. What are the factors that they will look for from their customers, okay, before they approve for any loan? Okay, for example, the banking institution will look in terms of what are the purpose of the credit, the purpose of the loan, okay, and then what are the source of repayment from their borrower. Okay, so you also can use it, okay, in terms of how in your presentation, in terms of how you want to get the trust from the banker in order for them to give the loan to your company. So you can look for all these factors, or you can consider for all these factors, okay, in order for you to get the trust from the banker, okay, in approving your loan. Okay, so you can use for all this information too for your group assignment. Okay, and then for example here, they will look in terms of the credit requirement of the current risk profile. So for example, especially in terms of our current situation right now, so you have to, okay, you have to link with the current economic risk, okay, with your company profile. So how actually your company, okay, will overcome for all those risks, the economic risk, the market risk, okay, in order for you to apply any loan from the banking institution. Okay, so these are the factors that will be looked from the banking institution, okay, in order for them to approve a credit to their customers, which is you can use all this information also for your group assignment. Okay, next we will go through in terms of the risk measurement. Okay, so we know that the definition of the risk is very uncertainty, right? The risk is uncertainty. So that's why for the risk of measurement, it's like a lot of process involved in the risk measurement of the banking institution. So we will learn here in this risk measurement in terms of what are the process, what are the method that we will use in the banking institution in order for them to measure the risk. Okay, so why is it we need for the risk measurement? Okay, in order for firstly for the banking institution, in order for them to have a comprehensive and accurate information. So that's why they have to measure the risk. So before they want to give the appropriate loan to their customers, okay, the accurate loan to their customers, so that's why they have to do for the risk measurement. So this is one of the reason here why the banking institution will do for the risk measurement to their customers and also to the company. Okay, so firstly, what are the method that will be used by the banking institution, okay, in order for them to evaluate the risk, okay, from their customers, from the company. So they will use in terms of the risk measurement, which is, okay, this is will be used by all levels of the bank, okay, which is from the officers, from the board of director. They have to know how to measure the risk of their customers, which is to measure the risk is not depends on the banker officers, which we can say that for all level or department in the banking institution, which is they have a responsibility to do the risk measurement, not just for the loan officer, the banker. Okay, we will evaluate the risk measurement. So from the lower level of management until the top level of management, they have to know how to measure the risk in the banking institution, right? So this is very important. So how do we measure the risk is by using internal risk rating system. So this is one of the system in the banking institution, which is they have a rating system. Okay, so rating meaning here, for example, they have a scale from 1 to 5. Okay, so 1 may be the lower risk of the customer, 5 will be the higher risk of the customer. So for the risk rating system, for example, they will look in terms of what are the capital of the customer, okay, and then what are the portfolio of the customers, okay. So this will be in terms of how the risk rating system, they will analyze the borrower ability, okay. So for example, in your group presentation after this, we will analyze the borrower's ability based on the 5 C's evaluation, right? So we will look in terms of the characteristic of the customer, collateral. So all these will be the risk rating, okay, by the banker in order for them to approve the loan to the customer. Okay, so for the banking institution, they have their own system lah. So they have their own requirement. Okay, for example, they will look in terms of what are the debt profile of the customer, the market indicators of the customer. So for example, if you want to present your company profile, so you have to give a trust to the customer in terms of your market indicators. Is it that your market that you want to enter for your business have the higher capability of profit or not, for example? Okay, so this is for the risk rating. How the banking institution to measure the risk is based on the risk rating. Okay. Okay, and then nextly, in terms of the monitoring and review, so after they will do for the risk rating, okay, so they will monitor and review regularly. Okay, so they will monitor, maybe they will call the customer, they will review the customer's report and all that. Okay, so this is how the banking institution will monitor and review, okay, the documentation of the risk measurement. Okay, next in terms of the individual credit. Okay, so for the individual credit, okay, so for example, if you want to apply any loan, we will look in terms of the individual criteria, right? So for your individual criteria, in terms of the customer's financial condition, what are the customer's income, so we will review the credit, okay, based on they must make sure that for all the credit, risk happen by the customer must not exceeding a certain parameters, okay. So for example, if you want to apply for your company's loan for 100,000, so you must ensure that you must have a good cash flow, expected cash flow, a good expected cash flow, a good profitability, okay. So they have their own parameters. So let's say if you want to have a loan for 100,000, so you cannot expect that you just will get 1,000 of profit for each month. So maybe it can be more than that. So they have their own parameters in order for them to review the credit by their customers. Okay. So this is for the individual credit. So why is it the credit monitoring system will look in terms of the individual credit? So this is the reason here why we will look in terms of the individual credit. So this is to ensure that the banking institution understand the current financial condition of the borrower. Okay, so we will look in terms of the current financial condition of the borrower. So let's say if you want to apply any loan, so that's why you have to submit a 3 months, okay, bank statement. So at least you must have a good financial condition for 3 months in order for you to apply for any loan. Okay, so that's why they look in terms of individual credit. Okay, same goes if you want to open a company. So maybe the top management, the owner of the company, they must have a good financial condition. They must get the trust from the banker, which is they will have a good profitability within 4 years. Okay, so that's why they must have a good current financial condition. Next, we will, why is it we look in terms of individual credit? Okay, so we also want the other Reason here is we want to ensure that the projected cash flow of major credit meet debt servicing requirement. Okay, so meaning here, if you want to submit for any loan for your company, so you must ensure that your projected cash flow is able to meet for the loan requirement. Okay, so your cash flow is able to meet in order for you to pay for your debt, your monthly loan repayment. Okay, so that's why we will look in terms of the individual credit. So this is certain reason here, okay, in order for the banking institution to analyze an individual credit. So they will look in terms of all these requirements, okay, or all these measurements. So they will look in terms of the financial condition, they will look in terms of the projected cash flow, for example, the collateral, right? Next, in terms of the risk measurement also, the banking institution, okay, will look in terms of the independent portfolio review. Okay, so independent portfolio review, which is a wider scope of the loan requirement. So maybe before this, we will look in terms of the individually. Okay, next, we will go through in terms of what are the industry, okay, and then what are the loan types, okay, applying by their customers. Alright, so we will look in terms of the independent portfolio review. Alright, so for example here, what will be reviewed, okay, in the portfolio review is they will monitor in terms of the composition and concentration of the risk. Okay, so we will look in terms of different scope of the industry. Okay, so what are the risks towards the industry, towards the market condition. Okay, so we will look in terms of the wider scope in the independent portfolio review. Alright, okay, and then the other coverage in the independent portfolio review is, for example, they will monitor in terms of the changing economic environment trends and events. So we will look in terms of the external factors. Okay, we will look in terms of our economic factors. Okay, so how is it our economic factors nowadays? Okay, the fluctuation of the profit rate, interest rate, the trends nowadays. So we will look, for all these factors, we will look in terms of the independent portfolio review. So usually for the independent portfolio review, will be done by the top management. For example, like the board of director, okay, the committee of the management of the credit risk. So because for all those top management, is actually they can forecast what will happen in the future, in the market trends, in the economic condition. Okay, so this is all will be done or reviewed by the board of director and also the top management of the committee. Okay, so this is for the independent portfolio review. Okay, next we will go through for the stress analysis. So for the stress analysis, this is actually towards the banking institution. Okay, so what actually the risk, okay, the possible events, the future changes, the economic condition that will affect the banking institution. So this is about the stress analysis. Stress analysis testing will be done, will be looked in terms of the economic condition, the future changes, okay, what are the possible risks that will affect, okay, the banking institution. So we will look in terms of the banking institution exposure. Okay, so for example here, the banking institution will examine the economy or industry downturns, the market risk events, and also their liquidity condition to ensure that they are able to give loan to their customers without lead to the bankruptcy. Okay, so this is for the stress analysis, which is towards the risk towards the banking institution itself, right? So for today, we will cover here until, okay, the risk measurement by the banking institution, okay, which is for the risk of measurement, we discuss in terms of what are the measurement methods, okay, what are the methods that will be reviewed by the banking institution, and then they will go through in terms of the process monitoring and review, individual credits, Okay, and then independent portfolio review, and lastly, a stress analysis faced by the banking institution. Okay, that's all for today. Thank you, class, for your attention.